Hi, this is Usdcad pair and today it's Monday 10th of June 2013 and the time is 13:38 GMT. We are looking at the daily chart of the pair and I'm using Ichimoku Kinko here, you see the Kumo here. I have superimposed Bollinger Bands, Alligator, which is Bill Williams indicator, and these purple arrows are fractals, another indicator developed by Bill Williams. And I also have used here these green lines, this histogram at the footer of the chart, which is representing the transaction volumes, and we will see where and how it can be used. So I wanted to show you that this pair, first of all, you should stay away from this pair if you don't have, if you can't afford its ups and downs. It has huge fluctuation. It's part of its idiosyncrasy. Each pair has a certain, let's say, idiosyncrasy, and although it has a main trend, a main appetite, as we see on the daily chart by the overall picture of the Kumo, it's going higher. It makes higher highs and higher lows, which is the definition of an uptrend. The corrective waves are deep, and they are enough and big enough to test your nerves and test your stomach's health. So unless you're sure you can afford these fluctuations, okay, go ahead with it. Let's see the bigger picture. On the weekly chart, we see a flat and horizontal Kumo. That's indicative of sideways movement, of consolidation. We can place some trend lines here and see, actually give a shape to this consolidation, which will help us visualize it better. And let me also this is not perfect, but anyway, you get the picture. Okay, so we see that the price since May, early May, late April of 2011, price has been moving in a consolidation mode, going up and down within a narrow zone which can be defined by this triangle. Okay, so we expect that if this corrective move, this wave now, the bearish wave, if it continues going down, it can't exceed, perhaps it will not go further lower than this border, than the border of this line. Of course, we expect a big breakout. It may be upwards, it may be downwards. We see that the leading Kumo is a belly up Kumo, flat bottom, belly up, which is a bearish formation. But at any time it can change, it can become a bullish, a strong bullish, sloping upwards, strong bullish Kumo. The price will show us. We see the leading alligator here slightly curved downwards, which shows that the pair has an appetite to go down for a while. The two Bollinger Bands, the edges are, the upper edge is turned inwards and the lower edge is slightly turned outwards, but it doesn't show that we expect an extreme move in terms of weekly chart again, okay? So let's go to the monthly chart and see. This is a very small picture on the monthly chart of a bigger picture, which shows that the pair has been falling for a very long time. And the last peak it made, the last big bullish move it made ended um, at the summer of 2008. That summer it ended and started a very big fall. Now I think this is just an assumption, of course. Market has the first word here. I think that since we have this flat top, belly down, leading huge bearish Kumo, it means that we have some space to, the price has some space to go, some way to go. It has to make its way through the Kumo, but odds are this, because this is a bullish formation, if the price makes it, because we see that the leading alligator is curved upwards, and we have this bullish formation, if the curve is completed and the two lines, the two borders of the Kumo, the Senku span B and the Senku span A cross, they will give birth to a bullish Kumo here, sloping upwards and having a sharp pointing upwards edge. So if this is the scenario, since price has been in historical lows, there is a lot of attraction here to bulls. Many bulls must be keeping an eye on the pair, and many bulls must be accumulating positions low here. So maybe this consolidation, this sideways movement is gathering steam, is the steam that bulls have been gathering before they give a huge push to the price upwards. So now let's go back to our reality and to our small day-to-day time frames. So back to weekly, we discussed it. Let's go back to daily. We had this big upward move for days. 1, 2, 3, 4, 5, 6, 7, 8. I count even the corrections. 9, 10, 11, 12, 14, 15, 16 days going up with small corrections, but going up. And now the last days we have this tendency, this bearish mood. Leading alligator shows that after we have a very valid fractal here at the upper Bollinger Band, which is above the teeth of alligator, the red line. It's on the upper Bollinger Band, and the leading alligator is curved downwards, which is a short entry trigger. Okay, we had that huge bearish signal here. Now, will this move, this downward move, last? We see that the edge of the upper Bollinger Band just turned outwards, and the same happened to the lower band, of course, and that means that we should expect an extreme move on the band where the price is moving. And which is this band? The lower band. Since the bands represent, they contain the price action, and they act as rubber bands, and they expand with increased volatility, and they contract with decreased volatility. Since they are getting ready to expand, it means that we should expect high volatility, and high volatility compared to where the price is, which is the lower Bollinger Band, gives us a signal and a hint that the price will go lower, even lower. It may last for a few days, okay, but it will give great profits, although the main mood, the main trend is upwards. Okay, it may last a couple of days, it may last more days, but nevertheless it's going to be a bearish move, the one we are expecting. So let's go to the H4 chart. The H4 chart shows definitely a bearish picture. You see that the leading Kumo has a sharp edge pointing down. The price is away from the Kumo and it's hanging down. We had a bearish Kumo breakout, and the only thing that shows that something bullish is happening right now is this correction here, the last candlestick, is Chiku span. Chiku span is turned upwards instead of going straight down. That's ideal for us to try to find the right spot to enter short. Okay, so we will not find it from the H4 chart because it may go even higher. We may not afford these big moves because we are talking about candlesticks of 4 hours long. So let's go to the H1 chart and see how things look like. On the H1 chart, we see that we have a bearish environment, bearish Kumo, leading Kumo. The edge is pointing down, but is not as sharp as it should be because of this corrective move. It has been curved a bit, and we can't pick our entry from here. So let's go to the M30. The M30 shows that the overall picture is bearish. The leading Kumo is bearish. The edge is rounded, so we should wait for this bullish move to end in order to enter, to jump in. So let's see where the bullish move ends. We see on the M15 chart that the bullish move is still taking place, and we will see if this candlestick is going to bring the price down or not. We'll see. We have an almost horizontal leading Kumo, which looks bearish, but everything is possible. The leading alligator is curved wildly upwards. It says bullish, 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 and many fractals here on the lower Bollinger Band with the leading alligator turned upwards. We have bullish biases here. Let's see. But these are small time frames, so what comes and appears like something strong now, in the next moment it may be reversed. So let's go to the M5 chart. On the M5 chart we see a big bearish candlestick being formed right now. Although the price had gone away, we had a bullish Kumo breakout with all the characteristics. You see the Chiku span was going straight up, but then it turned down. It made this angle here. It happened because of this candlestick, the last candlestick. So let's see how strong this move is, because probably it's a good entry point, a good short entry point. Let's go to the M1 chart. On the M1 chart, we see that we just had an upward move. The upward move made this correction, but it remains to be seen if this is just a correction or a proper reversal, what we want. So you wait, you observe the M1 chart, and you wait for the upper Bollinger Band to turn inwards. We already have the leading alligator curved downwards, and we have a valid fractal on the upper Bollinger Band. But I would rather wait a bit to see even a bearish Kumo breakout and then go to M5, make sure that things are definitely bearish here, then go to M15 and make sure that that everything is bearish. Check M30 for the same reason, then go to H1 and make sure that things are bearish, and last go to H4 and make sure that things are bearish, and then I go back to M5 or M1, M5 or M15, no bigger time frame, and I pick my entry. And where do I put my stop? Ideally, I should put my stop above here on the H1 chart, or on the H4 chart. It's too long away to put my stop here above the upper border of the Kumo. That would be ideal, but the distance between this point and my entry may be huge. So let's see a safe place. Where is a safe place to put my stop, where I don't risk getting my stop hit, and at the same time I can afford the risk. On the H1 chart, I check this place and see if they give enough space to the price to move, to fluctuate, till it starts, it continues falling again. So practically I pick my stop loss placement. I pick the point using this criteria of not getting hit, and at the same time leave enough space to the trade to breathe. How do I trail my stop loss? I trail it from the H1 chart preferably, and I put it a few pips above every new lower high. When the price goes down, it makes lower lows and lower highs. This is the previous lower high. Price continued falling after that, so it is valid, but we expect to see a new lower high, and probably price will go lower before it makes a new lower high. So when it makes a new lower high and proceeds and keeps falling, then and only then we will trail our stop from this point, the previous lower high, to the newer lower high. This is how we trail it. We might use other criteria to exit the trade. If we entered here in the Kumo breakout, in the bearish Kumo breakout on the H1 chart, we can plan our exit on a bullish Kumo breakout on the H1 chart. That's another approach to the trade management. So thanks for watching, and happy pips.